Alan, take us through your findings when you looked at what MMT actually is and how it's transmitted either in Japan or here in the U.S.
Yeah, I think, it's seen as a fringe theory, but if you go back in history, not that long ago, and you look at, for example, what happened with TOP, and you had a very large fiscal expansion. It was seen as widely needed. It was also partly money financed. You had QE that followed in its wake. The two weren't necessarily joined together. It wasn't a case of the monetary authorities and Treasury necessarily talking hand in hand to get that monetization. But monetary policy was following a big fiscal expansion. You've seen that same sort of pattern occur in Japan, a huge blowout in fiscal deficits, and they were ultimately, and a large part of it is money financed. Again, it's not necessarily the monetary authorities and the fiscal authorities completely coordinating and being tied at the hip, but de facto that's what's happening.
It sounds like a perpetual motion machine. Basically, the government borrows money and the central bank buys it up and you keep going at it forever. What stops it?
Well, the natural constraints are inflation. So the question is, what point do you hit inflation? Now, we know central banks haven't been that good at creating inflation, perhaps because there have been negative output gaps. They're remarkably good at creating asset inflation. So ironically, you get all the income distortions or the income distribution distortions from this kind of activity. It's not necessarily desirable from a lot of people who push the MMT theory.
So then, Chris, if you look at this, is MMT in the conversation we're having around it like another structural factor that you have to put into the market, or is this going to be a cyclical thing?
No, I mean, I think it's this debate's an important debate, but I wouldn't say even now, with all due respect, that it's part of the mainstream thought process about the economy. I think in a world where you see a lack of demand, the government stepping in and in a sort of more Keynesian way trying to fill that gap is what we've seen through TARP and things like that. I think that there are clearly very big differences between different economies' abilities to deploy these kind of tools. The US has the world's reserve currency. It's somewhat less impacted by what it does on the outside. And I think Alan's right. Inflation is, if you start to reach the limits of this, you have to say that inflation will be one of the limiting factors.
Yeah, one of the things that has constrained certainly bond prices has been the fact that other people really want to buy our bonds because they got worse alternatives wherever they are. But the ultimate question is how you're allocating capital, not just as a company, but as a country. And if you can generate this kind of money, is it being invested in productive purposes? Is this going into infrastructure? Is it going to things that will be productive? Or is it just going out into the cosmos?
Well, I think that the best way that capital is allocated productively and efficiently tends to be by the private sector. So it depends on whether you're financing large public deficits, which in sort of classic theory will crowd out some of those private investments and those efficient allocations of capital, or whether it's being used by the private sector and encouraging the private sector. If the private sector is falling short, as it was at various points in the crisis, you can clearly see a role for this where public spending doesn't crowd out. If you're in a more normal environment, I think that the externalities are greater.
But Alan, what strikes me though is what's happening over in France, what's happening here in the U.S. political environment, both sides of the aisle. They're talking MMT. I mean, AOC's talking MMT. That's sort of more of a mainstream kind of thing. It's going to get bigger before it gets smaller, no?
Potentially it could get a lot bigger. I think you have to consider two things. One, the starting point in the US is terrible. We've got a cyclically adjusted budget deficit of about 5% of GDP. So it's really not asking for fiscal stimulus at this point in any sort of orthodox sense. But at the same time, if you've got a new president, what we've seen over the last 3 administrations at least is that the first year is when you can actually get anything done. So the timing in terms of a fiscal stimulus could come through at exactly the wrong time, and you're just going to add more fuel to the fire in terms of the fiscal deficit. So, and then it's going to run into all the issues in terms of how do you finance that. And immediately, the Fed's not going to immediately finance that. But what happens if the economy slows down? What happens when we go down to zero interest rates again? The Fed is going to be back in there again, responding in essence to what's gone on the fiscal side. So again, you get sort of an MMT-Lite type situation.
But I would say it's not surprising, really, to see that populist politicians would be attracted to a theory that says that the normal restrictions on economic policy might be lifted for them.
And populists on the left and on the right.
Yeah.
That's one thing they can agree on. let's
just like they can both agree that infrastructure would be good, although they still haven't done anything to Alan's point.
But it does raise the point, to Alan's point, that since we haven't gotten the inflation, that the Fed's been really good at asset price inflation, but not actual inflation, that's created an issue, a structural issue potentially within the economy that needs to be fixed, and that's what everyone's gravitating towards now to fix it.
Yes, I mean, just to take up the point in terms of the private sector and how that fits on the public sector side, not all deficits are the same, really. So if the private sector surplus starts expanding to offset the public sector deficit, then the external accounts actually will flatline. And that's actually what we've seen in the US. The current account's been steady. So the exchange rate hasn't been flashing red lights to suggest that there's a big problem here. If you saw the external deficit blow out, bigger problem at hand.
I mean, that's what you've seen in Japan as well, right?
Exactly.
I mean, you've seen private sector balance sheets improve whilst public sector balance sheets have got a lot worse. And so at the end, the country has a single balance sheet, and it's the combination of those two things.